Well, students, let us now take up the compound journal entries. What's a compound journal entries all about? What's a compound journal entry? All along, we have seen that in a single journal, there are total just two aspects, that is one debit and one credit each other. But it may not be like that always. There will be cases when one debit and correspondingly two or more credits that will be matching the total of this debit or vice versa also possible. I repeat, there will be cases when one debit and correspondingly two or more credits that will be matching the total of this debit or vice versa also possible. Also, it is possible that there will be two or more debits matching the total of two or more credits. However, the steps involved for journalizing will be the same. Only thing, we have to analyze more aspects for making a single journal entry. Let us take up some cases. Case number 1. Purchase goods from Mr. Roy of rupees 40,000 at terms 10% trade discount and 5% cash discount. Paid amount at the time of purchase itself. Obviously, this is a cash purchase, no credit purchases involved. So let us keep aside the amount part. The three aspects. Purchase goods is there. You may say there are two varieties of discount, trade discount and cash discount. My students, trade discount is never accounted. Hence only cash discount. When a purchase, discount will be received. When we sell, discount will be allowed. So here it is discount received. Why discount received has been credited? It's a nominal account, credit or gains. Why purchase has been debited? A number of times we have discussed purchase of goods, real account comes in, hence debit. Why cash has been credited? Cash to real account goes out, hence credited. Now, how we arrived at the amount? Let me explain something about trade discount. The story starts after trade discount only. In the sense, let's say you went to a shop and something 30,000 rupees they offered or list price, you bargained and brought down to 25,000. As far as you, the accountant, is concerned, purchase price starts from 25,000 only. Anything above that is immaterial. Okay. And the trade discount is never accounted. I think it's very clear to you. Here, 40,000, 10% trade discount means 4,000. Net of that is 36,000. Okay. So purchase is obviously for 36,000. Now, let us calculate a discount. 5% cash discount. I told you trade discount is summarily ignored. Cash discount 5%. 5% of 36,000 is nothing but 1,800. And the difference you'll find 34,200. That much cash has been given. Obviously, it necessitates in narration, being the goods purchased from Mr. Roy at 10% trade discount and 5% cash discount. Case 2. Purchase the goods from Mr. Kiran of rupees 40,000 on 10% trade discount and 5% cash discount. Half the amount was paid at the time of purchase. Here you will know that credit dealing is involved. Half the purchase is credit purchase because half the amount was paid. Only the cash part is half. Balance half part is obviously credit purchase. Whether it is cash purchase or credit purchase, the total purchase will be at the outset we have to book. And purchase I need not explain again. Purchase is debit. And how 36,000 come? Net of trade discount. How much is a trade discount? 10%. 40,000 minus 10% of 40,000, that is 4,000. That is nothing but 36,000. Fine. Now, why Kiran has been credited? Well, this is something, a new concept too. I have already told you the golden rule for personal account is debit the receiver or credit the giver. That's what I have told you. But my students, an extension also is there. So many other ways, various others explain. But I am of the opinion, just keep this in mind, that will suffice our requirements. What is the extension? Debit the one who owes to the business. I repeat, debit the one who owes to the business. And credit the one to whom the business owes. And credit the one to whom the business owes. That is the extension of the golden rule for personal account. Here, to Kiran we owe, hence he has been credited. And why 18,000? Because 50% of the purchased amount. Fine. And discount received, let us take. How discount received? I have a typing mistake is there. It should have been received. Anyway, discount received account. How 900? 5% of 18,000. And balance cash 17,100. And the narration, of course, being the goods purchased from Kiran, partly for cash and partly on credit, at 10% trade discount and 5% cash discount. I reiterated because there is something new. Extension of the golden rule for personal account. Debit the one who owes to the business and credit the one to whom business owes. Case 3. Sold goods to Raman, rupees 20,000. Allowed him 10% trade discount and 10% cash discount. Received half the amount by cash and balance by check at the time of sale. So there is no credit deal. It has been settled across the table. It has been settled across the table. Maybe partly by cash and partly by check. Okay. So I don't owe him. I don't owe Mr. Raman anything in future. He has been settled across the table. Right. Now, sales, how 18,000 comes? And first of all, why sale has to be credited? I need not tell you. Purchase is to be debited means relatively things sale has to be credited. But however, goes to the golden rule, grassroots. Sale of goods. Real account. Goes out, hence credited. Cash comes in, hence real account, of course, debited. Bank means banker. Check received by the business means check has been practically received by the banker, debit the receiver. Discount allowed. Sale is associated with, or discount allowed is rather associated with sales, because when we affect sale only, we allow discount. And discount allowed is very much a nominal account. Is it not? Yes. So it's an expenditure also. So debit all expenses. Nominal account rule says debit all expenses and losses, credit all incomes and gains. Hence, this discount allowed has been debited by virtue of the same being a nominal account, and the nominal account rule says debit all expenses and credit all gain. Discount allowed is very much a expense, hence it has been debited. Now come, let us take up the amount part. Sale is of course 18,000. Why it is 18,000? 20,000 is the listed price, net of trade discount. Only the story starts. 2,000 goes towards trade discount, balance 18,000. As far as you, the accountant, is concerned, from 18,000 onwards, only sale is to be booked. 18,000. And discount allowed comes how much? How much is the discount that has been allowed? 10% cash discount. 10% of 18,000 is 1,800. And the balance amount, whatever is there, that is comes 16,200. Equally settled with cash and bank. In other words, he owes me net of discount 16,200. Out of that 8,100 cash he has given, and the balance I received a check. I hope things are clear to you. Being goods sold to Raman at 10% trade discount and 10% cash discount on cash basis. And let's take one more. Sold goods to Banerjee, rupees 50,000, allowing 5% cash discount and 10% trade discount. Half of the amount was received by check. So first of all, what has been our sale? Net of trade discount, 10% of 50,000, that is 5,000. So 50,000 minus 5,000, 45,000. So sale has been booked for 45,000. I need not again tell you why sale is a credit. You know it by now, right? By Banerjee is debited. Yes. Extension of the golden rule. Debit the one who owes to the business. Debit the one who owes to the business. 45,000. Half only he has settled across the table. Balance half, that is 22,500. He owes to the firm. That hence he has been debited to the extent of 22,500. Now let us, okay, this 1,125 rupees discount. It is nothing but 5% of 22,500 is 1,125. Okay, 5% of 22,500. Why 22,500? Why? Because 22,500 is a credit dealing. Balance 22,500. That is 45,000 minus 22,500. There is another 22,500 that's being settled across the table. In that one, he is entitled for a discount to the extent of 5%. That I am suffering under discount allowed account, and the amount happens to be 1,125. The balance amount, of course, 21,375, that has been received by the bank. Discount allowed, you know, it's an expense, nominal account, debit all expenses. Being the goods sold to Banerjee, partly for cash and partly on credit, allowing 10% trade discount and 5% cash discount. So, how to deal with compound entries you have learned? I hope so. Now let us deal with some complex journal entries. In fact, I'm not dealing with the entire things now because there are so many complex journal entries. Complex journal entry is not something special. Only thing, you will find it is slightly away from what you have learned so far. Okay, but the principle and technique involved is absolutely the same. Only thing, you may get some extra ideas. That's all. I'm just taking up a single case now. For example, goods costing ₹500 were used by the proprietor for domestic purposes. Journal entry for the same will be drawings account dated to purchase. Certainly something new to you, is it not? Where drawings comes, why purchase is credited? I'm used to debit purchase only. Why it should be credited now? What is this drawings all about? Certainly something new to you. Let me explain. I've already explained that businessman who is very much an outsider for us. Of course, businessman is very much an outsider for us. Entity concept in business. Business and businessman is different. We consider everything from the point of view of the business only. This businessman can either give to the organization, such giving is called introduction of capital. Let's say capital gets operated. Or he can remove from the business something. He can take out cash, he may take out the purchased goods, or he may use the purchase stationery, anything for his personal purpose. Anything he takes out for the personal purpose. An account called drawings will be debited. It is just opposite to capital. Okay. And the corresponding credit depends on what he has taken, how he has taken. If he has removed plain cash, means cash will be credited. If he has drawn money from the bank, or his banker has given to him, means bank will be credited. Or the purchased goods, as in this case, purchased goods has been taken home, means purchase will be credited. I need to explain you why purchase needs to be credited. When we purchased originally, what we did, purchase was debited. You know that? Yes. Suppose 1 lakh rupees goods were purchased. Purchase was debited. And I sold the same goods for 1,25,000. So what will be the profit? 25,000. Is it not? But out of this purchase, 10,000 was taken home by the business. What is sacrificed by the business is 90,000 rupees. So purchase has to be slashed by 10,000. That's why that a credit has been given to purchase and it has been brought down to 90,000. And this 90,000, of course, we are sold for 1,25,000 means profit is 35,000. So what you will learn later on the cost of the goods sold, concept, everything later on. So actual purchase, effective purchase meant for the business is not 1 lakh. Out of that, 10,000 since has been taken home by way of drawings, 90,000 only is the effective purchase for the business. Okay. So I hope this one you understood. Briefly, as a giver to the businessman will be credited. As a giver to the businessman will be credited because credit the giver. And as a taker from the business or receiver from the business, he will be debited. Okay, right. There are many such special entries. So many are. I mean, there's nothing special as such, but away from whatever you have learned, this normal stuff. We shall take up these things later on. One special video itself, I may bring out such complex analytics. But I reiterate it, the techniques and principle is same. What is the principle? To conclude before this video, what's the principle of generalizing? Locate 2 aspects, classify, real, personal, or nominal, apply golden rule, write a journal entry with the debit entry first, followed by the credit entry. That's all. Is it not? Well, students, I hope you have got a strong base now in proposing a journal entry. In my next video, I'll be discussing about ledger. What are the discussion I'll be making with you? What's a ledger? How to post from journal to ledger? How to balance a ledger? And also how to decide whether the closing balance of a ledger is a debit balance or a credit balance. A very simple, practical way I'll explain to you. This is at most necessary for you. Okay. The simple technique of making a trial balance also I will teach you in the same video. That means practically bookkeeping aspect we are covering with the next video. That is what is the journalizing, ledgerizing, making a trial balance. Okay. Well, students, thank you. Thank you very much. Keep on practicing, and practice makes things perfect. See you soon.